In this video, we will delve into the concept of dollar cost averaging, its benefits, and how TrailAlgo can help you optimize your DCA strategy to improve your trading outcomes. Dollar cost averaging is a strategy when we keep increasing our investment or capital regularly, no matter where the price is. But in TrailAlgo, we have a unique approach. When the market moves away from the entry price, and our entry is significantly below the average price, we double the investment. This is a less common model of dollar cost averaging. Let's explain dollar cost averaging with a simple example. Imagine you have $1,000 to invest in a stock. The stock price is $100 per share, so you buy one share for $100. Now, let's break down the math. Your initial investment is one share at $100, which equals $100. Now, the stock price drops to $50. You decide to buy more shares to lower your average cost. You spend another $200 to buy shares at $50 each. At $50 per share, you can buy 4 more shares. So, 4 shares at $50 each equals $200. Now let's look at your total investment. You have 1 share from your first purchase and 4 shares from your second purchase, giving you a total of 5 shares. You spent $100 on the first purchase and $200 on the second purchase, so your total investment is $300. To find your average cost per share, you divide the total cost by the total number of shares. $300 divided by 5 shares equals an average cost of $60 per share. So, by using dollar cost averaging, your average cost per share is now $60. It's easier for the stock price to rise from $50 to $60, increasing your chances of making a profit. This dollar cost averaging strategy helps you buy more shares when prices are low, which can lead to better gains when the market goes up. TrailAlgo is a great tool for using dollar cost averaging. It helps you figure out when to buy more shares and when the price might go back up. TrailAlgo looks at market trends and patterns to tell you the best times to invest more money. Let's look at a chart to see how this works. On this chart, you can see how TrailAlgo suggests entry points for dollar cost averaging. For example, if we start with an initial investment and the price drops, TrailAlgo will notify us when it's time to buy additional shares to average down our cost. This systematic approach ensures that we make data-driven decisions rather than emotional ones. The automation provided by TrailAlgo simplifies the process, making it easier to stick to your dollar cost averaging plan without constant monitoring. It's important to use only part of your money for dollar cost averaging, to avoid tying up all your funds. Let's go through the steps. First, choose a percentage of your total account to use for dollar cost averaging. A good range is 10% to 40%. For example, if you have $10,000 in your account, 10% of $10,000 is $1,000. 20% of $10,000 is $2,000. 30% of $10,000 is $3,000. So, you should use $1,000 to $3,000 for dollar cost averaging. This keeps some money free for other opportunities and spreads out your risk. Next, if you're investing in stocks directly, divide your dollar cost averaging funds into 4 trades. If you use $2,000 for dollar cost averaging, the first trade will be $70. The second DCA order will be $140. The third DCA order will be $420. The fourth DCA order will be $1,260. This is based on TrailAlgo's strategic entry points. When a stock moves opposite to expectations, it's better to focus on buying rather than selling, especially with TrailAlgo. This is because the potential for growth is much higher than the maximum loss. Buying and holding assets is generally safer than betting against them. Stocks and cryptocurrencies can grow a lot, while their maximum fall is limited to 100%. By using TrailAlgo, you can automate your dollar cost averaging strategy and increase your chances of making a profit. To do dollar cost averaging systematically, invest a fixed portion of your money each time the price drops by a certain amount. This keeps you disciplined and helps manage your risk. The process of doubling the account size, as mentioned above, is called factoring. If factoring is set to 2, the above-mentioned doubling of the investment should be done. We've covered the basics of dollar cost averaging and how TrailAlgo can help. In the next tutorial, we'll explore more advanced features of TrailAlgo to maximize your trading efficiency.